So now we know a bit about business valuation.
We know about discounted cash flow analysis, DCF, and we've also learned how to use market-based multiples to estimate the value of a business.
So here is the big question that is in your mind right now. Can we, as individual investors, use our ability to do business valuation to identify winning and losing stocks in the stock market?
And the answer is no. Let me repeat that. No. What was the answer? No, no, no.
Now, why can't we, clever people, pick winning and losing stocks? We know about market multiples. We know about DCF. Why can't we beat the market?
So Earl, simply stated, the market is too fast. The market responds to new information fast. In 15 minutes, the smart people in New York are constantly using supercomputers to do data analysis to find mispriced publicly traded stocks.
No academic research in accounting or finance has found any reliable evidence for profitable, implementable trading strategies based on financial statement numbers or based on the business valuation models that we've been discussing.
By the time you have used your analysis to pick an undervalued stock, it is a week, 2 weeks, 2 months too late.
Yes, there are people who make money buying and selling stocks. A part of this is luck. Even in Las Vegas, some people win. Part of this is business contacts. Experienced analysts are privy to all sorts of industry data that regular people, like you and me, just don't see.
Now, I often hear people say that Warren Buffett seems to have a good track record of picking winning investments in the stock market. Why can't I do that?
You can, if you develop the same business contacts that Warren Buffett has, and if you get access to the information from business, government, and media figures that Warren Buffett gets. He sees dozens of potential deals cross his desk every day, and he learns from every one of them and ends up investing in just a handful of big deals each year. Okay, so why even learn about business valuation?
Because the total number of publicly traded companies in the United States is just 15,000. There is an active market for information for these 15,000 companies, and these are the ones for which your valuation skills aren't going to help you pick winners.
But there are 15 million total companies in the United States. The vast majority of them are small businesses.
For these 15 million small businesses, the simple valuation techniques we have discussed, especially the market multiples, are usually the only rational basis for estimating a value.
For example, if your brother-in-law wants you to invest in his carpet cleaning business, the valuation techniques that we have discussed, based on some simple financial statement numbers, are usually the only reliable way to estimate the value of that carpet cleaning business.
And if your brother-in-law doesn't have any financial statement numbers, then you have no reasonable basis on which to determine the value of the company and make the investment. So you'll have to walk away.
Now about stock picking, let me tell you a personal embarrassing experience. When I was young, foolish, starting in the mid-1990s, my wife Ramona and I conducted a 7-year stock picking experiment/contest. We started with $2,000 that we had in addition to our regular savings. We rode the internet bubble up to almost $9,000 in this little Stice speculation fund, and then finally crawled away after the bursting of the bubble with $1,342.
But we'll all hear people at parties all the time talking about their stock picking successes.
Oh, sure. People who are currently doing well in the market boast at parties about their stock picking prowess. Now, they typically don't tell us about all of their picks, usually about half of them, because the other half have gone down. And when they are losing money overall in the market, they don't say anything.
I'm sure that when you and Ramona were riding the market up, you were boasting at parties.
Of course we were. Now that I'm older and wiser, I realize that any talk I hear about how easy it is to make money in the market is coming from a biased sample of people who are currently experiencing a run of luck. They aren't geniuses. They don't have a foolproof system. They are just lucky for now.
So here is what we suggest. Do not use any valuation techniques to try and pick winning stocks in the stock market. If you want to invest in the stock market, you should invest in some kind of diversified fund, an index fund. That's what I do.
And that's what I do as well, now that I've learned my lesson. And when should you use the valuation techniques that we've talked about in this course? To estimate the value of that small business you're thinking of buying.
To estimate the value of your own small business if you're thinking of selling or taking on a partner.
Be prudent. Be cautious. Do your best to base your valuation on reliable data.
Best wishes to you.